I'm not, well, in the short term, I think yes. I mean, his comments today absolutely gave the market some air cover for sure. But, you know, we talk about a flattening yield curve like it doesn't make a difference anymore. The speed with which it's gotten down to 25 basis points to me is pretty staggering. And I know Tony Dwyer will say you have 12 to 18 months of sort of runway for the market to continue to go higher. I'm not certain that's the case anymore. But in terms of value growth, you know, we talk about value stocks. I mean, Microsoft, which I think we've all been pretty bullish on, and steadfast, they report on the 19th. That stock's now trading close to 27 times forward earnings with an EPS, even if they raise their EPS growth is nowhere in the ballpark. So even value stocks to me are becoming a little expensive. That to me is a concern. The fact that the market didn't sell off today off the back of NetFLiX with every conceivable reason, not least of which was you can talk about the faux pas in Helsinki yesterday. Market doesn't seem to care about anything right now.
That's right. And they don't. And to your point, they don't care about the yield curve.
They don't.
So why should we care about the yield curve? Why does everybody bring up
because
the yield curve?
Banks don't care about
Why does the Fed put forth a paper that says don't fear the yield curve, and we're all fretting about the yield curve?
Look, there's no way Powell's going to talk about the yield curve. Okay, there's no way Powell's going to say anything in terms of trade wars or tariffs until he has to. You've got a Fed meeting. The next time they're probably going to hike is September. I don't think he needs to commit himself to anything before then. And ultimately, if I look at the rest of the market,
he really spoke about it a little bit today, though. But he did talk about it.
He said we'll wait and see.
To it.
He said we'll wait and see.
But less tariffs are better than more tariffs. I think he did say that. So he has spoken about it. He's going to be adaptive. He's going to be flexible, and that's what the bulls wanted to hear by the tape that we saw today.
All right. Our next guest has been warning investors to sell technology. He joins us now on set. So let's welcome Mike Wilson, the Chief U.S. Equity Strategist at Morgan Stanley. I would imagine, Mike, that people aren't too receptive to this idea of selling technology right now with the NASDAQ at a record high. How does that call feel in your gut right now?
Yeah, when you insult people's kids, they don't take it too well. So, yeah, the call went over like a bag of rocks last week, notably. I won't lie, I was watching Home Run Derby last night.
That's a bag of rocks.
Had a few beers and felt pretty good about the NetFLiX. Maybe this is it. Of course, as you all were just talking, we had a roaring comeback. Now, the stock was still down 5%. So I wouldn't say that it's, clear sailing. Now, it did hold the 50-day and all that. The technicians will love that. Look, our call is hated because we don't have a smoking gun. I'm not calling for 10 NetFLiX to happen, right? Missed quarters. All we're calling for is an exhaustion of this move, right? This year, we've had a rolling bear market. I mean, it's gone through every sector except two, tech and consumer discretionary. Every sector is corrected in multiples by somewhere between 15 and 30%. Tech and consumer discretionary are flat on multiples. Now, yeah, they're growing faster, but that does not seem like an outcome that's possible, that we have to complete this rolling bear market, and we think it'll happen during this quarter and into August.
You start getting concerned, though. I mean, what seemed like a catalyst to sell technology, the NetFLiX miss, not just in the quarter that they reported, but in the future, the quarter that we are in, had every opportunity. You had every opportunity right here to say, you know what, for FANG in general, I'm worried about all these names that are similar to NetFLiX that had massive runs, that may be high on valuation, and they didn't. It was NetFLiX that finished lower by 5% and not the rest of FANG. Does that make you rethink? If you had known that would have happened, would you have engaged in that underweight technology? Because that seems like that would have been a major catalyst for your call.
It would have been. I'm not throwing the towel here because I think we have technical levels we have to get through on the broader market that we haven't yet. And we haven't even begun earnings season, let's be honest. What I'm looking for is actually companies to beat numbers and then the stock to sell off. To me, that's a worse sign, exhaustion signals. Right, so NetFLiX, they'll come back to that if they really want to sell it. They'll come back to it and sell it later. By the way, this is a tactical call, right? This is a tactical call from the beginning of the year, which we started out this year saying we were going to have a corrective action on multiples. We've had that, and this is the final piece. So once we get to these two sectors and they root them out on valuation, I think we set up for a pretty good finish, quite frankly.
So, Mike, to that point, us on the desk, we have the luxury of being able to change and be flexible on a daily basis, sometimes an hourly basis, and see the market change.
I don't change on a daily basis.
You should. You should, actually. When you're wrong, you don't change. That is correct. So when you look back in the beginning of the year, you had this tactical call. And when you started to second guess yourself, or sometimes when you second guess yourself, how long does it take you to change in the machine that you're within?
Yeah.
How long can you change it? Your mind right now, if you decided to get bullish on technology, how long would it take?
Well, in this case, it'll be quick. And we made the call a week and a half ago. We said, look, we're going to know pretty quickly. And we knew we were early. We thought we'd rally into the quarter earnings reports. And we said 2,800 to 2,825 is a good zone to think about where we could exhaust. So if we get well beyond that, say 2,850, we'll throw in the towel. We're talking about 2% upside from here where we'll throw in the towel. So this is a short leash call. Okay, I still feel good about it, to tell you the truth. I actually like it because the receptivity to it was, there was no receptivity to it.
Yeah, I'm not asking to play stock market with individual names, but we mentioned Microsoft. Yeah. They reported. Again, I think it's gotten a tad expensive. They don't have the growth rate, in my opinion, to justify a 27 multiple. Will that be sort of a typical bellwether name or a name you'll look at, we got this right, or maybe we got to reevaluate?
Yeah, so Microsoft, it's on our fresh money buy list. It's our focus list of stocks, and it's done really well, as everybody knows. There's nothing wrong with the fundamentals, but yeah, it's gotten expensive. It's 27 times for an $800 billion market cap company that's not growing as fast as some of these internet companies, right? It's much more mature. So absolutely, and all we're talking about is a 10 to 15% multiple contraction. That can happen in a week in some of these names. So that's exactly the kind of stock that could get reset. By the way, if that happened, we'd want to buy it. But we think that reset needs to happen.
All right, Mike, good to see you. Thank you, Melissa, for coming by. Mike Wilson of Morgan Stanley. When you take a look at tech in general, do you think it's overvalued?
Well, that's the thing. I don't think it's all one monolith of valuation,
sure, yeah.
right? If you look at a NetFLiX, that's just, I can't get comfortable with that valuation. But if I look at an Alphabet, I'm very comfortable with that valuation. In fact, I think it's a value stock and a growth stock. So we'll see next week. And same for Facebook. Similar valuation is compelling.
And what's tricky about how we look at these companies, especially within FANG, Amazon, what is it? Is it a tech company? Is it a consumer staples company? They're moving into Whole Foods is about being into consumables and basically short-term consumer staples, low-margin goods. Apple arguably is a great consumer discretionary play. So ultimately, my view on tech here is it's going to continue to outperform because I think it's actually very diversified. If you look at the triple Qs, Apple the biggest weighting in there, and I think Apple's actually very cheap relative to its peer group. So today's move is constructive to me. I think the Fed is the most important ingredient in this market, and Jerome Powell today was moderate enough that people feel better.
What'd you do today, Grasso?
So I was going to pull the trigger on NetFLiX, but it violates my 3-day rule. So I have to wait a couple of days there. But what I did notice were the home builders, which I'm long still in that home builder space. If Chairman Powell starts to get even more dovish, or he's just dovish enough right now, you're going to see that home builder space start to rip higher.
Okay.
I thought it was interesting that Tenet Health was up almost 2% today. Not that they're similar, but UNH was down big. Tenet Health rallied. Maybe Tenet Health sets up pretty well. I think we did, what do they call that thing when I go over to the board and we
fast
have
pitch, guys.
Power pitch,
we
right?
We do it every time.
We're going to power pitch today.
Once a week.
I think Steve is going to power pitch today.
It's going to be good.
At any rate, THC performed well on what I thought should have been a down day for them.
All right, coming up, Bitcoin soaring through 7,000 to its highest level in more than a month, and top strategist Tom Lee will join us with one chart that he says shows the moon could be near. Plus, as stocks make a run toward the highs, there's a handful of well-known names getting left in the dust. But are any of them worth a buy? The traders will go bottom fishing. And did Elon Musk violate his own company's policies when he went rogue on Twitter? Leslie Picker has been doing some digging and has an exclusive report that she will share just after this break. We are live at the NASDAQ market site in a stormy Times Square. Much more fast money still ahead.